Okay.
Well, this is Perrette Parker with August Great Real Estate, and we're here with Rhonda Hutchinson with the Lone Lioness. We're talking about mortgages today. We're talking about buying a house. What are my keys to success? And so we want to help you get moving. Say hi, Rhonda.
Hi there. Hi, yes, this is Rhonda Hutchison. I am the Loan Lioness. I'm with PRMG, which is Paramount Residential Mortgage Group. I am excited to be here with Ms. Parker. We have some great information to share with you about really just the steps to home ownership, the keys to home ownership. And so let's get started, Perrette. Let's go. Let's do this.
Let's get into it. Yeah.
We can be able to educate everybody. You ready?
Okay, so we're talking about the keys to home ownership, and a lot of times people don't know what they need in order to get started.
Right.
I said before, it's going to be me and you. We're just talking. The first and foremost thing is many times I ask my buyers, what's making them nervous about the home buying process? And some of their common objectives to buying a home is little or no down payment.
Yeah, little or no down payment.
We're going to talk a little about that.
Right, and that's one of the key, Perrette, that's one of the key factors that I always hear. What do I need to do to get into a home? I don't have any down payment. So you're right, that is one of the most common objectives.
And the second one was poor or unknown credit. And we all know that credit is king. It really does matter in the
buying power. We call it, Perrette, we call it buying power, right?
Right. And so we want to make sure that we talk about that a little bit as well.
Okay.
And then fear of the unknown, not knowing what they don't know. And that's where I and you come in.
Right.
A real estate advocate, and I advocate for all buyers. And I want to educate and make certain that people know what they need to do, how they need to do it to get to the end result, which is the key to their home.
Absolutely.
And the very last thing is the home buying process is too complicated. Well, once again, that's where I come in. I'm trying to help bridge that gap and make certain that they know who their transaction partners are. There's 5 of them. And come to this whole big, wonderful part.
Right.
You can see there's 8 easy steps to the home buying process. And the very first one is meeting me, a real estate professional. And my whole purpose in this transaction is to make certain that it runs as smooth as possible. But in order to do that, we have to have people like Rhonda.
I have to come into that play, right?
That's where the next step comes in when you say get pre-approved. And so we're going to talk a little bit into some of those items. And this is the first part of a mini series because each of these steps has someone, a transaction partner involved. And there are 5 of them. As I said before, we have the real estate professional. That's the first one. The second one is the mortgage officer. The third one is the title company, the title agent. The fourth one is the inspector. And then you have, last but very not least, is your insurance agent. And I plan to have a conversation with each of those transaction partners to help people know what they need to know about the buying process. So let's get after it. So what's up next? My home loan. How do I bridge that gap? What do I need to know, Rhonda? We're going to get into some of your steps. We're going to first talk about getting pre-approved.
Okay.
Down payment sources and city, county, state grant and bond programs.
Okay.
Get after it?
Say that again.
Are you ready to get after it?
Oh, I'm ready. Yes,
right,
ma'am.
let's go. Okay. So the first one is, how do I qualify to buy a home?
Yeah, how you qualify to buy a home, of course, we know it's the very, very first step. Before they reach out to you, Ms. Parker, we say, okay, how do I get qualified to be able to make that step to go out and find that new home? And how I qualify is by those important things. It's like your credit score. Just making sure your credit score is a qualifying credit score. And what I always suggest is at least a 620. Now, let's say that a 620 is a minimum credit score. We always strive to have a higher credit score because the higher the credit score, guess what? The more buying power, correct?
Hey.
Yeah, because the
Buying
more,
power.
exactly, because you think about it, if you have someone that, if you were able to loan your personal finances or money to someone and they have a 620 versus a 700, who do you think you're going to choose? You're going to choose that person with the 700 because you said, okay,
Absolutely.
they're less of a risk to me. So we want to make sure that we have at least a qualifying credit score, but always shoot for at least, the higher the credit score, 700, if that's something that we can achieve. And then, of course, we talk about the credit history. And it's important that we don't, when we're looking to purchase a home, that we stay away from a lot of those things like collections, accounts, and charge-offs. And also, if there's a bankruptcy within the last 2 years, we have to wait until that bankruptcy is cleared at least 2 years on FHA loan product. And then, of course, there are higher years for conventional. So we want to make sure that we maintain a healthy credit history. And then let's talk about debt to income. Just making sure that your debt doesn't overcome your income, that you don't have more debt to income, because that can stop you. You can have a 700-800 credit score, but if your debt to income ratio is high, just meaning that you are actually bringing in less income than your debt, then that's going to halt and stop the process as well. And then also let's talk about your years of employment, that you have to have at least 2 years of employment, and that's consistent employment. That's usually is gaps no more than 4 months is acceptable without some kind of circumstances that you may go on, just say a death of a spouse, or we can just say something, maybe an illness, like maybe cancer or something, and you had to be out of work for a length of time. Then those circumstances are, looked at on an individual basis, but we look for at least 2 years of active employment.
And so, quick question. What if I don't have these things?
Well, if you don't have those things, then we need to make sure that you talk to a loan officer, originator like I am, and be able to at least assess. Let's pull your credit let's pull your credit even before I pull it. Because I always suggest that you go to annualcreditreport.com and pull your credit. See what your credit history is. See what your credit score. I think with them you have to pay a minimum charge to actually get your credit score, but it always contains credit history. Even Credit Karma, even though Credit Karma scoring model is a lot different, it still provides you with that credit history to say, okay, what do I have on here that I'm not aware of? Oh, I didn't know that they reported me late, or I didn't know that medical bill just showed up, that I didn't pay. I thought, or some kind of discrepancy. Because I see where there was, in particular, there was a lady that I spoke with yesterday. She had an accident, and her car was totaled, and it was paid off by the lien holder, but they reported her late 60 days after the car was supposed to be paid off.
Oh, wow.
So those kind of things, if you're not making sure you monitor your credit, those kind of things won't appear until you in the process of purchasing a home. So it's always good to make sure that you're looking at your credit report. You're making sure you get some kind of alert, set up some kind of alert just in case there is something that appears on your credit report. So you can be what we call proactive versus reactive.
Right. And so what about monitoring my credit and I just don't have enough credit? I don't have a high enough score. What is there some things that you guys work with, or how do you instruct those buyers?
Okay. One of the things I always say, I kind of stay away from the, and I always do a disclaimer. I am not a credit expert, but what I'm suggesting is based on experience. And I make sure I say that over and over again. But what I do, if I can look at a credit report and I see there is something that that I can really just say, like, for instance, that there's credit cards that you're over 30% utilization. Those are things I can suggest. Okay, pay this credit card down to your at least under 30%, and I think your credit score, will of course will increase. And then of course, some other things that I do suggest is that if you have some sort of collections, and if the collections is within, let's say, if it's a recent collection, and there is, we'll just say, for instance, it just popped up on you as less than a year, then those kind of things, if it's not medical bill and it's just some kind of collection, that's why. I apologize. It's some kind of collections. Then those kind of things that I said, okay, you may want to contact the creditor and see if you can make some kind of arrangement to them to pay that debt off, because that initially affects your credit score. So those are the kind of things that I do suggest. But again, if it's something that I can't just look at the credit report and kind of see, okay, this is something that we can correct within 30 to 60 days, then I will refer to an outside collection agency and get you ready, because it may not be now. I always say it doesn't mean delayed, denied. It just means delayed, and let's work on those things. And that's one of the things I advocate for, is that I make sure that just because you may not qualify today does not make you less important in this transaction. Someone that has an 800 credit score, that has all the money in the bank. If there's a will, there's a way. Let's work with someone. Let's work together, or let me refer you to someone, and then we can go from there in regards to getting you ready to qualify for a home.
Well, awesome. That's awesome. Good news. So we got up next. How much money do I need to put down?
For how much money you need, I know it's been a myth that we've been hearing this for a long time. You need at least 20% down to purchase a home. That is definitely a myth. It just depends on the type of program. For instance, conventional loan is usually, if you're a first-time home buyer, there's 3% of the sales price that is required for down payment. And if you're not a first-time home buyer, it's 5%. And of course, it's 5% of the sales price. On an FHA loan, it's 3.5% of the sales price. And for USDA and VA loan, there is no down payment. And let's make sure we understand that, because sometimes they get confused when they say, well, I thought it was no down payment. There's no down payment, but there's closing costs. And I know we'll get to that later, but I want to maybe stress this is down payment, because closing costs plays another part into the final number for closing. But down payment is a requirement based on the loan program.
And then also, for a lot of home buyers, when we talk about the actual down payment, there are cases where, depending on the home, there's ways to roll the actual down payment into the home. But that's another conversation for another.
Yeah. Yes, that is another conversation, and a lot of that's really going to be based on your debt to income ratio. It's just, that's one of the things that and so like you said, that's another conversation, because that's an individual kind of basis, person, individual on account. It just depends on what your debt to income ratio is, and so that's person specific.
This just proves that when you're talking to a mortgage officer, there are so many questions to ask, and nothing wrong with finding out your options.
Right. Correct.
Never ask what your options are, then you're feeling like, oh, I'm stuck. I can't do this. I can't do that. But there are ways to go around some things that you don't have in place right away.
Exactly, and you hit the nail on the head. Contact your loan officer and just see what your options are and see what you qualify for, because it could be low as 3% of the sales price. And of course, if you're a veteran or you're looking in the USDA area, which is a rural area, then there's no down payment. So there are options out there. You just have to contact your loan officer to see what your options are.
And there are also options when you're actually purchasing a home that might, benefit you depending on which seller you're going with. Some are generous. So we're going to see how we can get you every option possible.
Exactly.
The key to the whole thing is making sure we communicate about it and talk about it and get educated about what's out there and what's available.
Exactly, and that's where you come in. That's your expertise, right? Right. That's what you
Right. Okay, Rhonda, I'm loving this. So what about the closing costs? We talked about that earlier. So, talk about it a little bit for us.
Okay, I call them, there's three tiers to closing costs. Okay, and this is separate from the down payment that we have to, the 3% to the 5% of the sales price of a loan. This is what I call the three tiers. There's a cost of the loan, and those are origination fees, and not all lenders charge origination fees. PRMG, where Paramount Residential Mortgage Group, we do not charge origination fee, but that's lender base. Then we call our processing fee, and that's just fees for the processor who's processing your loan. And then there's underwriting fees, and those fees go directly to the underwriters who actually approve the loans. And then, of course, we'll talk about those fees associated with down payment assistance. Different down payment assistance programs have different fees, and these are fees that are determined by the individual program. So those fees are required based on the down payment assistance program. And then we'll talk about the appraisal fee. Those fees are part of the upfront fee, which you will actually get back at the end in a credit, but they are included in the closing costs, as well as any title fees or any recording transfer fees. And then the second layer are what we call our prepays, and those are fees that are paid in advance. And those are 12 months of your homeowner's insurance. We always collect a year because your homeowner insurance is always paid a year in advance, as well as any upfront mortgage insurance. And upfront mortgage insurance is usually included on our FHA loans. There's flood insurance, of course, if that's applicable. And then there's any daily interest. And that means, for instance, if you're closing on the 15th of the month, then you're going to pay interest from the 1st to the 15th. And that's also included in your prepays. And then we'll talk about our reserves. Our reserves are the 3 months of mortgage insurance premium. So we have to collect at least 3 months of mortgage insurance and 6 months of property taxes. And what this is actually put into an escrow account, and is paid out to either the insurance agent or the property taxes when they're due at the end of the year. And then also your prepays are also included in the escrow account. Those two things are included in the escrow account. So that's what we call our closing costs. So combined with the closing costs and the down payment assistance is the money that you will need to bring to the closing table. There are exceptions, like they work with you. You may get a seller's credit that they may, or the seller may decide to pay the lender's title. So all of those things are things that you will work through that will reduce your closing costs. And of course, if there are any down payment assistance, it also will reduce your closing costs. And I know we'll talk about that a little later.
Wow. Who knew? Who knew? Yes, you did.
Yeah, that's why I say they were saying, well, I thought that I received, I only had to pay 3.5% down payment assistance. Well, I got to come up with all this. There's closing costs associated with that. So it's very important that, and this is one of the things that I really strive to do, is to go through when I have a client and I'm actually going what I send out is a fee itemization sheet.
Okay.
And it breaks down all the fees, and I go through all the fees so that the buyer will understand at the very beginning what it takes and what the fees are and what the costs are to their particular loan, so there won't be any surprises at the closing table when it's time to close and say, oh my goodness, I didn't know that. So it's very important to make sure that we discuss that at the very beginning to let them know what are the fees and what's the costs involved in getting to the closing table.
Okay. Well, it's always good to know what you need to know.
Yeah, exactly. Because
know it and not have it.
Yeah. You don't know, it's a different ball game. It's a different ball game. So just think about it. Just think about when you go to the store and you see something that was supposed to be on sale, and then you're at the cash register and they say, okay, it's $500 something, but when you went there with the ad, it was on sale for $299, and you're so shocked and say, no, I thought it was on sale for $5.99, $2.99, and here you're charging me $5.99. So it's the same thing It's just making sure that you know upfront what your fees are. So when you get to the cash register, then
Right.
you won't have any surprises, right?
What they say, check the fine print.
Yeah, check the fine print. Exactly. Exactly. You have it. So.
Okay, so when we talk about closing costs and we talk about, you know, down payments and all those things, but there's some programs out here that lenders, some are lender specific, some are city, county. Tell us a little bit about these and what this about.
Okay, go to the next slide for me.
Okay.
Okay. There are programs. They're still, I know that because of COVID-19, some of the programs have dissipated. They're gone away. And when I say the programs have gone away, some of the lenders are putting a lot of strings on those programs and may not offer. But those programs are still available. There are several programs that are still available. We still have our city programs available, our county programs, and then with PRMG, we just still have some of our state programs available, and I go through those. And these are just some. There are additional programs, city programs, and county, but I named some of the ones that are maybe used more frequently, like the city of Dallas. We still have the city of Dallas, the city of Irving, Arlington, and Fort Worth. Those city programs we still have. And of course, you can give me a call and we'll leave our information or contact me let's discuss what the criteria are, what are the guidelines, you know, what this credit scores or what DTI, debt to income you need. So I can talk to you individually about that, but I just wanted to let you know that they are available. And we still have our county programs, the county of Denton, Dallas, Harris County, and also we have Dallas County. Oh, I have that on TikTok. We have Dallas County, but evidently Dallas County is more prevalent than we have Dallas County because it's on there twice.
So maybe it's Ellis County. Does Ellis County have any?
Yeah, Ellis County. That may be Ellis County. You are exactly right. Ellis County. Yes. Okay. Yes. But Dallas County, that is one of the Dallas County is one of the programs that are used a lot, so it deserves to be up there twice.
Right.
And then we have our state programs, which is SEF. We have SEF. We still have TDHCA, which is Texas Department of Housing and Community Affairs. We have Shanoa. That program is still people use that. I know TSHAC, which was one of the ones that I used a lot, in which it's not that the program has gone away, and I know it's not the program that's gone away, it's that the lenders have decided not to use that particular program because all the overlays that, not the program, but the servicer of the program, the restrictions that they have placed on the lenders, but I'm sure that program will come back.
Okay.
So I'm waiting for it too. Because I like for my buyers to have several options to be able to choose from.
Because TSHAC, wasn't it geared towards specific professions?
Yeah, exactly. Like teachers and firefighters and anyone in the health industry. Yeah, and that program, and that's one of the reasons TSHAC, I'm not trying to give a plug for any one of them because all of them are great programs. But TSHAC was the one that offered that program for our teachers and our firefighters and police officers and our health workers.
Yeah, they must bring that back. I mean,
they have
COVID, and we realized, they kept us afloat,
Right, exactly. And like I stated, it's not actually the program that's gone away. It's just the lenders have decided not to use those programs at this time because of COVID-19 and the risks involved and the overlays that the actual servicer of these down payment assisted programs have placed on the lenders. And I'll give you an example. For TSHAC, for instance, if there's a loan that defaults within 4 months of the servicer, for the loan being sent to the servicer, that the lender has to buy it back. And and so you can understand a lender's position. Well, that's like in the giver. You give you something, you take it back. So but it's reverse. It's that okay, if it defaults within the first 4 months, then the lender has to buy the loan. And it was too much of a risk for the lender because they're in the money, they're in the business of making money, not taking loans back.
So are they working on something that can help teachers and firefighters? And, because I know that, in some of those professions, although they are our most, you know, some of our greatest professions, they
Mhm.
paid the same as
Right.
of other positions. So is there something else in play with that, or?
I'm a, not that I'm aware of it at this time. Of course, we operate to research things and find out if there are anything. So that's why I'm really an advocate of TSHAC coming back, and I'm hoping that that will be very soon. I'm hoping within the next, less than 30 days that we will get that back. But
Okay.
these
Okay.
programs, the SEP program, Texas Department of Housing and Community Affairs, their interest rates are low. They're low now, especially TDHCA. We're looking at in the threes. So the interest rates are still good for those programs.
Oh, well, awesome. Awesome.
Mhm.
Awesome. Okay. All right. So did we want to go back to the other slide?
No, just keep on going forward.
Okay. All right. So we talked about all those items, and I really appreciate you coming out today and just chatting with me a little bit about what's going on in the mortgage industry, because sometimes a successful homeowner is somebody who first has to avoid risky loans. They have to be clear about what they're trying to do.
Mm-hmm.
Can't get into a home with a risky loan or something that's not good for you and expect to be a successful homeowner.
Mm-hmm. Exactly.
So
Exactly.
I appreciate your time today. So
No,
I
it's
wanted
my
to make
pleasure.
certain that everybody who's looking at this video will see that, the first and foremost thing on my list is always about the loan, because that is the thing that's going to keep you in the house.
Right, right. Exactly.
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 Making mortgage payments on time is that second thing.
Yeah, exactly.
Yeah, you're staying current on your property taxes. Of course, like I said, up front some of these items already.
Mm-hmm.
Make certain that I set them again. Maintaining adequate insurance. An insurance agent is key. You got to have that appropriate insurance.
Exactly. You have to be insured, because you can purchase a house on today, and tomorrow there, God forbid, there's a fire. So you want to make sure you have that adequate insurance as soon as you close that home.
Right.
Not a year from now. You want to make sure that you have that adequate insurance coverage as soon as you close on that home.
Right. And having that, actually, like I said, about the 5 transaction partners, I'm going to have a minute with each of them. I only chose you first because the mortgage is the most important piece. If the mortgage is not in place, those other 3, you can't talk to them.
Exactly. We can't move forward.
Right.
Process. Right.
Right. So, as I said, keeping the home in good shape, that's where the inspector comes into hand. If you got a bad inspection at the beginning and you didn't know what you didn't know, you could possibly be walking into a home that has all kinds of issues. And we want to make certain that we get you the right information on that as well. So I'm going to have an inspector on it at one point and put the video out as well.
Good. And one of the things I just want to talk about, just a point, just keep the home in shape. When I think about that, is just keeping your home in shape, that if you need to refinance, because, when you refinance, there's an appraisal that has to be done, and that the sales price of your home, or what we call the market value, it's going to be really based on what the shape your home is in. So for refinance purposes, and like you say, for resale purposes, is that you want to make sure, if you decide to sell, you want to make sure you keep that home in good shape. So that's a great point.
Yes. And then we said about keeping the emergency fund ready, things like that. And then avoid borrowing against the equity for consumer purchases.
Right.
Say anything about that piece?
Yeah, avoid once, if you're going to refinance or you're going to take the equity out your home, make sure it's something that's going to make you money. If it's an addition on your homes, an addition, like you said, an addition that you're going to add value, not
Right.
going to a trip to the Bahamas, and I'm going to take some equity out of your home, because that's not going to bring you any kind of additional equity, any kind of money. So that I agree. Avoid borrowing any equity against your home for consumer purchase. And I know some people take out for college education, but that's an investment. That's an
Right.
investment. And that's
Right.
still going to bring you a return. But just for fragile activity, no. Don't do it for just those kind of things.
Okay. And then last but not least is to get help when there's, at the first sign of trouble.
Yeah.
A lot of times there probably should be a post help group, for
Mhm.
people who've bought homes, because
Mhm.
sometimes you feel alone. Once you get into the home, you don't have all those people, but believe it or not, you still have your realtor.
Mhm. Yes. And you have your
Still,
loan officer that can direct you, and direct you to those, if you need help, those agencies or those persons that can help you, because everyone, just trust me, it's going to be a time in everyone's life that they're going to need some kind of help. And the thing is, don't be embarrassed and don't be afraid to ask for that help, because it can actually save your home.
right. So after that, let us help you move. When you look at what we've shared today, these are some of the most important keys in order to getting the key to your home. So if you need to reach out to me, here's my contact info, and it'll also be on, when I post this video, it'll be on there as well. And then you have Rhonda. You see her business card and her information. You see a phone number for her as well. And we are available to talk to
Yes.
and to help.
Yes, absolutely.
Move.
Absolutely. I'm here. Please don't hesitate to call me with any questions. And like I said, if I don't know the answer, I promise you that I will make sure that I find out the answers and get back with you to make sure that you're educated and informed.
Right. And I'll leave you with one last thing. The only dumb question is the one that didn't get asked.
Yeah. Amen.
Hey.
All right. See you guys another time. Bye-bye.